All righty, all righty. Welcome to Thursday night training. We are in the building. We're in the house, ready to learn, ready to perfect. For those of you that were not on last week or may have missed the recording, what we're doing for the next 2 weeks now is we are going to be sharing different ways that our admin actually trade, right? And the reason being is because we want to give everyone some options. This is not a cookie cutter type of outfit. Hey there, Paul, how are you? How are you? This is not a cookie cutter type outfit. Everybody learns different. And so what we want to do is give everyone an opportunity to just kind of witness how others are trading. And if it's something that you resonate with and it feels good in your head and it doesn't feel like a burden on your brain, then that may be a style that you want to adopt. Now, one of the things that we encourage and we urge is that whatever you decide to do, you want to stick with that, right? Because the number one problem that most people have in this industry is there's no stick-to-itiveness, right? You have to stick and stay. And sticking and stay does not mean that you're not going to have those days. Like, you're going to have those days. Everyone will. It's the market, right? But if you have a consistent high winning percentage, then that's what you want to stick with. In order to be successful at any style of trading that you adopt, you have to commit to that style of trading and continue to enhance your ability with that. One of the things that you'll see as well is that our foundation is the same, right? There's some tweaks and little massaging here and there, but the foundation is the same. And so tonight we have Dave tonight, super excited to have him come on, and he's going to share and impart some of his insight and wisdom in the market and how he's trading as well. So, of course, I was going to say take notes, but if you're a note taker, take notes, right? It is recorded, of course, but take notes and review it, right? Review it. But just remember, we're not encouraging you all to jump around. We're not encouraging that at all. We just want to share with you all what others are doing and they're having success at it. And so if it resonates, sounds good. Go ahead on and jump on. So with that being said, Paul, let me give you permission to share your screen, and I am going to turn it over to you. I'm sorry, not Paul, Dave.
That's okay.
I'm sorry. Sorry about that, Dave.
I've only shared my screen one or two other times, so hopefully I can do this right.
Okay, I'm sure you got it. And let me make sure I gave you permission. Yeah, I did. There you go.
Can everybody see my screen?
Yes.
Yes.
Okay. Well, thank you, Janice, first of all, and just for the chance to, I guess, share a couple of ideas. I mean, this is the first time I've actually had an opportunity to really talk about a trading method. There's so much to learn in this business, yeah. And I still feel like I'm kind of a rookie at it. But two, 3 weeks back, I took Janice's Forex Mastery class, and I learned so much from it so quickly. It was, I mean, a little bit for me was drinking out of a fire hose, but I learned some really cool concepts, and the biggest thing that I got out of that class was to do a more accurate analysis of top-down analysis when I'm looking at charts. And so I've gotten into a much better habit and pattern now of analyzing when I look at a chart, and I just I don't jump around anymore. I have a very specific thing that I do all the time. And for me personally, I used to be the kind of person that would look at like all 28 pairs and look for trade opportunities. And I really didn't give it too much thought about shrinking that down to just a few pair. But I have done that now. And in fact, I've got it, even for the last 2 weeks, I've only traded one pair in the last 2 weeks. I don't even look at anything else.
Yes.
But I want to, and one of the things too that I think is important is to have an understanding of what type of trader you are.
Mhm.
Are you, for me personally, I'm an intraday trader. So I don't like to be in a trade in the market all day long, or for 2 or 3 days at a time. I like to find a good setup if I can, and if I'm in that trade for a few hours and it gives me the the number of pips I'm looking for, or if the market happens to stall and I'm in profit, well then I'll take it. I'll take what the market gives me. But I'm not a swing trader where I would stay in trades for 4, 5, 6 days. It's just not what I'm comfortable with. So I'm an intraday trader. So when I look at my screens every day, I try to figure out are there opportunities right now, or are there not opportunities right now, and just to wait for the right setup. And Paul mentioned that last week too in his trading. I think he's when I listened to him and watched his setup, and he's one of the most disciplined guys I've seen in terms of
Yes.
just looking for setups and waiting for them as long as it takes until the right setup is there, and then you take it and you run with it. So I've been working on that pretty hard because I've had in the past just a lot of lack of discipline for waiting for good trades. So now I just wait for good trades. I am going to trade. I'm going to share one trade with you that I took this morning, and I posted a couple pictures in the Telegram group earlier today about it. And it's for the pound USD. And I guess I'll get into my screens right now and kind of show you what I was looking at. Can you guys see my mouse moving around?
Yes.
Okay. So when I look at, and again, I'm only trading the pound USD at the moment because I really want to get to know this pair really well. But if you look at the pattern of the candles on the chart, the first thing that I always look at and since this is a day chart, a daily chart, so every candle represents a day's worth of activity. And if you notice up here, we're in a bearish position on pound USD right now. And I'm in reading a lot about the pound dollar pair lately. The Brexit stuff that's going on in Great Britain it's still kind of in limbo out there. Great Britain is supposed to be breaking away totally up I think on December 31st, away from the European Union. But so I read the news every day. It only takes me a couple minutes to kind of see if there's anything out there that's going to affect the pair when I look for trade setups. And I'm trying to make a habit right now. This has been kind of crazy. I've never really done this before, but the London market opens at 3 a.m. Eastern Standard Time. So the last few mornings, I've been getting up at 3 a.m., which has been really kind of hard, but it's paid dividends for me. I know that like when you're in Uncle P's classes and stuff, he says to really kind of wait and see, like after the first hour, that the London market is open, for the market to settle down a little bit before you look for any trade setups. And by and large, I do that. But if I see something that's really interesting to me, even within the first hour of that market being open, I'll consider taking a trade. So this morning, with the story I'll tell you is, I always look at the daily chart. So you can see from up here coming down, we've been in this bearish trend. And then as we got into this area down in here, where price kind of consolidated for a few days, and then it reversed. And price reversed up above the 13 EMA, and then had another reversal back down, almost right to the point of where the EMA and price would meet. And then it continued on up for 2-3 days. And even this morning, this red candle right here was today's or yesterday's was yesterday's daily candle. So when I got up this morning and I saw this candle wasn't red yet. It was actually still green, but it did have a little bit of a wick on it. So there had been some reversal back, in the bearish direction. And so I wasn't exactly sure when I started looking at the chart this morning if price was going to continue this trend the way that it has in these last 3 days. Is it going to keep going up, or is it not? But when you look at down here at the bottom of the screen with the MACD, my yellow line crossed over the red, so that is an indication that we've had not so much a reversal of price, because we don't see another arrow down here yet, but price had definitely started trending back up in a direction over the last 3 days. But after I looked at my setup on the daily, I went and I immediately go and I look at the 15-minute chart. Mm-hmm. So I went to my 15-minute, and I'll shrink this back down. And this area right in here is 3 o'clock this morning, right where I have my crosshairs. That is the 3 a.m. candle this morning. And if we look at price had crossed and closed below the 13 EMA. And if we also come down and look at our MACD, my yellow line would be probably your blue line if you use a blue. I changed it to the yellow on the chart just so I could see it better. But the yellow line had crossed down, it was crossing down below the red line and was heading down. So I got in the trade at this point right in here. I placed 2 positions on it. And I really, honestly, at that point, I did a little bit more analysis on the 4-hour and the 1-hour and the 30-minute, but I've been getting in more of a habit now of looking at my daily chart and my 15-minute chart. And so I set these trades, and I thought, and at the time, by the way, the red zone that you see up here, that's all the way up here now, it was actually shifted down in this area this morning. Mm-hmm. So I was in the sell zone, or in the supply zone of placing the trade. So I let the trade open. I opened 2 positions, and then we had this little reversal candle back up here, and then price just tanked. We have this huge engulfing bearish candle that happened, and I knew before I got in the trade, because I checked the news for the day, and there wasn't any Great British Pound news that was considered high impact news. So I thought this trade was just going to start slowly trending down and down and down based off of what I was seeing, because I was seeing back on my daily chart. I'm gonna open this back up again, but I was looking right up in here, and I could see that price had been starting to reverse back down. So that's why I got in that 15-minute trade, or a trade off the 15-minute chart. So lo and behold, to me, this was just a stroke of luck, frankly. But then this huge downtrend happened. And the reason it happened was I wasn't in this trade 10 minutes when a piece of news came out that really caused this move down. And so I went, while this was happening, I went out and looked at to see what was the cause of this. And there's a website that I check often. It's called Forex Live. There's 2 or 3 different sites that you can check for news and just analysis. But I went to see Forex Live, and there was a piece of news out there that said that the negotiations between the European Union and Great Britain with a certain some trade things that they were working on with respect to Brexit had broken down. And as a result of those trade negotiations breaking down, this happened. Mm. And so I managed to be on the right side of the trade when this news came out. Again, there wasn't anything on the calendar that caused me to to get out of the trade or anything like that. There was no Great British Pound news, but this was just a random news event. So after I got in this trade, then I started manually. I got in. I was in 30 pips, 40 pips, and at that point I set a manual trailing stop of 20 pips. And I didn't set like a trailing stop like you can an automatic trailing stop. I just watched the trade, and I just every 20 pips or so that this trade went down, I would trail it and manually change my stop loss lower and lower and lower and lower as it went down. And so as you can see from this happened so fast. This was from 3 a.m. right here, and at the bottom where this happened right here, this is 5:30 a.m. this morning. So in a matter of 2.5 hours, all of this action happened. And I ended up setting, my final trailing stop that I set was like right in this area where you see the blue box. The blue box is shifted a little bit right, but it was right in here in this zone. And then price reversed here, and that's when I got stopped out. So from the time I placed this trade here to the time this stopped out was about 157 pips. But what got me in the trade in the beginning was looking at my daily chart and seeing that price was starting to head back in a bearish direction. I did do a little bit of analysis here, like on the 4-hour, but I knew price was in this red sell zone during the at 3 a.m. this morning. But I really focused more on the 15-minute chart. And at the time that I did this, also price was, it was just coming out of the sell zone. This is the 30-minute chart. So you can see price was just coming out of the supply zone up in here as well. And I took the trade. I would have taken the trade like right in here if you were looking at a 30-minute chart at that point. So this would have been my entry right at this point where I'm circling at that candle. So I knew we were going in this direction, which matched the direction of the daily. So overall, we're bearish on the daily. So I always want to try and take a trade that's off the 15-minute chart that matches the direction of the daily. I'm not a very good counter trend trader. And so I always want to try and go in the direction of the trend. I treat the daily chart as if it was like a monthly chart for purposes of being an intraday trader. So I don't really check the monthly chart or the weekly chart all that much. I'm more of like I said, the intraday kind of guy. So that's what I did to really look into getting into this trade. Now there's really a lot of times there's 3 questions that I always ask myself before I get in a trade. Number 1, what is the trend on the daily? Where is it going? And even though, if we go back and visit the daily for a second, even though the price is bearish on some of these, in a lot of these candles in here, we also see some bullish moves happening up in here. Whoops, in this area here and in this area here. So even though overall we're bearish, there are some bullish moves, some bullish corrections that have happened that I guess if it's clear to take a trade like that coming out of a demand zone in the 15-minute chart, then I would certainly consider doing that. I don't want to wait 3-4 days before I take another trade.
Right.
But if the setup is correct and I'm following price action on any particular day, then I'll see what is out there, and if it's a trade that I feel comfortable taking, then I'll take it. But I'm also mindful of the fact that we are in an overall bearish position, and until we see another arrow pop up heading in a bullish direction, this is probably going to stay this way for quite a while because of the Brexit situation in Great Britain. This green arrow came in on September 1st, And here we are 30 days later, still heading in that direction. And it's, from the news I've been reading, that's probably going to be the case for a while yet. So I'm expecting to see more bearish moves coming back down into this zone in the days to come. I don't know how long it'll take, but that's what I'm expecting to see as we get more into October. So as I mentioned, the questions that I ask myself are, what is the trend on the daily, and what is price doing right now? And I always want to know what price is doing at the very time that I'm considering looking or putting in a trade. But I got to know the direction, the overall direction of what's happening on the daily chart. And if there's an opportunity for me to place a trade off of the 15-minute based on what the daily is doing, then I'll give that some consideration. So that brings me to the third question that I ask myself, is that where is price on the 15-minute chart in relation to the daily chart? So, I used to think that, and this is where I got all messed up, months ago, about looking at about the top-down analysis for a trade. I would sometimes get myself look at it and go, well, since right now price on the daily chart, coming back to the daily here, price is right in the middle between these two zones right now, between the supply zone up here and the demand zone down here. So price is in the middle, and it's the daily, obviously the daily candles move a little bit slower, but I had always gotten confused, a while back about, should I take trades based off of the fact that we're only seeing, kind of not really a lot of clear trends to me, and did it make sense to make any trades based on just what I'm seeing off the daily chart? And Janice's class really helped me with that. It straightened me out in terms of what I should be doing. So, but when I saw this candle heading down, that caused me to get in the trade up here. Now, here's what's interesting about what happened today. So I got out of this trade like right in here. This is where I got stopped out at about 5:30 this morning. And I don't think this happens all the time, but you can see that the market really drove price down really hard. And then it got down into this blue zone, or this demand zone. So price is kind of like a rubber band. It's going to stretch and stretch and stretch until it can't stretch anymore. And then finally, some tension has to be released out of the market. So when the price got down into this zone down here, you can see that we had this really strong impulse move. Then we had some consolidation going on. And I was waiting to see that if we were going to have a continuation heading down again. And if we had broken price down in here, I might have considered another entry. But since I got stopped out, I was really obviously very happy with what I got out of the trade. But then at 9:30 this morning, this huge engulfing bullish candle happened. This is the opening of the US stock market. And when the stock market opened this morning, it opened, I believe it opened in a positive direction. But you can see what the market makers did. They totally drove price right back up, way up to the top again, where I originally entered the trade, and even beyond that. So all these sellers who were taking trades all the way down, and there were probably a lot more people that were placing sell trades down here, which would be a big mistake to do. You never want to take a sell trade down at the bottom in a zone like this. Now the market makers take this and drive price all the way back up, and as a result of that, all these sellers down here are now trapped, and they're losing money big time. There's people that were getting stopped out, people who may have had large positions lost a lot of money if they were waiting for this thing to reverse, because it never reversed. And then it went all the way back up. So, I mean, this was 150, 160 pip move, and then then the market drove it right back up and recovered all of those pips and then some. And then it eventually came back down again. And I wasn't doing any more trading for the day, but I suppose if I could have, if I would have, you know, seen this happen again, I could have taken another trade coming back down this way, but I didn't do that. But to me, this was a really good lesson in the fact that having a trailing stop on here was critical for me, because if I hadn't have done it, I would have lost all of that money.
Mhm.
I would have lost all of this going back up to the top, and then I would have been in a losing position up here. And I probably, if I would have been, you know, it came back down eventually, but the fact that I got stopped out down here in profit means that I'm good. And you know, I got what I wanted out of the trade and beyond that. But to not have a trailing stop in here I would have broken a cardinal rule, and I would have been in a losing position really quickly, or I would have lost all that money that I made.
Mhm.
So that's really when I'm doing an analysis on a chart. That's really how I look at it. I look at what's trending on the daily first, and what's happening on today's daily candle in relation to the overall trend direction on the daily chart. And then I look at what is price doing right now. Is it bearish? Is it bullish? Is it just ranging in a certain, just up and down in a certain range? Has it broken out from a range and is going up or down? I want to see that there's some sort of a breakout that's happening before I consider taking a trade. I don't want to take a trade when I'm in consolidation, because I don't know which way it's going to go. I want to see it commit to one direction. And then the other question, as I mentioned, where is price on the 15-minute chart in relation to the daily chart? And I knew it was heading in a bearish direction based off of what I saw this break, and then I just happened to be in the trade when this happened, when that Brexit news came out. So it ended up being a pretty good morning. But that's really how I try to follow. I follow Janice's rules from the early entry strategy, and and I pay a lot of attention to the MACD down here. I got to see this break happen here. I got to see price or the MACD break down below like this in relation to where the candle is closing on the chart. And as you can see, as this went down on the MACD, you can see all that separation between these two lines. That's an indication that there's a very strong bearish move happening at that point, until it ran out of gas down here at the bottom. And this is when we got all this consolidation going on here. And then the yellow line crossed back up and went all the way back up again. And then we have another strong move back up to the top. So I pay a lot of attention to this MACD movement, because it's a current indicator. It's not a lagging indicator of where price is. And so that's what has led me to that trade. So this is the pattern that I always try to follow with all the trade setups. And I'm not looking at trading 28 pairs anymore. I'm looking at all the pound pairs, because I want to trade the London session by and large and into the New York session. And most of the time I'm just looking at the pound USD for my purposes of trading. So that over the last couple of weeks, that's been pretty successful. I've had some losing trades in there just from not following all the rules and being a little bit impatient. But when I follow the rules and I'm patient with waiting for the best setups, I have a winning trade every time. Mm-hmm. So that's been my experience with and how I look at charts, how I trade. That's really about it. So, Janice, that's pretty much it. I didn't have anything else to cover, but I found that this has been a really successful system for me.
Well, first, let me just say that your breakdown is just phenomenal. I mean, you hit on quite a few points. I've been trying to jot it down, but I just love the systematic way in which you are going about entering your trades. And we'll break that down a little more. But before I go into that, this is your time to ask any questions based on what Dave has shown and shared. This is the opportunity that you all have to get clarification. So I'm going to open up, the chat. Just jump on out, or if you don't have, I know Stacy don't have sound, but anyone else that with no sound, type it in the chat. If not, just jump out and ask your question.
Okay, Dave, I have a question. So when you get in on your 15, you don't use an arrow to get in? Because that was even though I don't see an arrow where you got in at.
Yeah,
but
you're right, Doreen. You are right about that. I did not have, when I got into this trade this morning, there was no arrow, there was no triple arrow signal. In fact, you see where this, where the dot is right there?
Mm-hmm.
Yeah, so that actually, earlier this morning, there was a triple arrow there.
Mm-hmm. Okay.
And then when price reversed back up in this zone right here, I think it must have, turned it into the dot.
Mm-hmm.
But when I took the trade up here, this is all I would see this morning, was just this up in here. There was no arrows up in here. Well, I guess the green arrow would have been up in here on the 15.
Yeah, but it was in front of, but what I wanted to say was even though there is no arrow, that was an excellent entry.
Yeah.
Even without that.
I don't know. I just happened to, when I was looking at my charts this morning, I happened to see that. And then I just did a quick look at the daily and saw that we were heading in a bearish direction.
Yeah, that MACD was perfect.
MACD. And I'll tell you one thing, guys. One thing that I've trained my eyes more to look at too is I look more at the MACD now than I do looking at the candles.
Yeah.
I think that's a critical piece of this, because if you let me unfreeze these charts a little bit and go back a little bit over here. Like if you go back and see where I'm over here with this bullish move, where price crossed like right in here.
Mm-hmm.
Now, you see this move happening before this triple arrow notification came up.
Mm-hmm.
So with price moving, or with the yellow line crossing the red line down here, and price in the closing above the 13, then that's a great opportunity for an entry.
Perfect.
So that would have been a counter trend trade relative to the daily chart.
Mm-hmm.
But on that particular day, price was moving in a bullish direction on the daily.
Right.
So in going back and looking at these daily charts and seeing this move here, that would have been, let me put these back up here. Come on. There they are. Okay. That would have been this move on one of these days. So price was moving up, and that's where we would have seen that move on the 15-minute chart. So would that have been a good trade to take on that day? Absolutely, it would have.
Yeah.
Absolutely, that would have been a great move. Price at that point was, that was probably just a day or two ago, but you could see price was above the 13 EMA, and so that would be a good signal that price is moving in a bullish direction. Now, granted, this trade I took this morning, this candle is still above the 13 EMA, but I know the overall trend has been down, and that's the reason why I took that trade, because I knew that we were heading in this direction anyway, and it looked like this little 3 or 4 day correction was over, and now price was reversing back down. So when I saw that, that's what triggered me to take this entry right here.
Mm-hmm.
But yeah, there can be days, even when you're taking on the 15-minute chart, you might be taking a trade down here going in a bullish direction when the daily is saying that price is going up. Perfectly fine to take that trade if you're comfortable taking it. And then in terms of my take profit, when I took that trade this morning, I didn't set a take profit on it. I just let it run. I didn't put a specific number in the trade, a take profit number in the trade itself. I just watched it develop. And then as I saw that this engulfing candle happened, that's when I set my stop loss. and then I just let it I kept running it down and down and down. And it's, I mean, again, this happened all in a matter of, 2 hours or 2.5 hours. And I thought, well, this is kind of a rare thing. I don't see this happen very often. It's more like these kind of candles that we usually see, and not a move like this. But you could see over time that his price had been moving up and up and up and up and up, that, in my mind, what I'm looking at too is I'm looking at, the market makers are slowly accumulating buyers all the way up with these small little candles and these small little moves. And then this really hard drop happened. It might've been, because of the news that happened this morning, but it took out all these buyers. If they were waiting and for price to keep going up, it took out a ton of buyers here, which, replenished the coffers of the liquidity coffers of the market makers. And then it came back down in this zone. And if we look left, that's where there was some consolidation going on. So it came back down here to match where this is here. And then we had this run up again, just like we had a run up over here. So it kind of repeated a pattern like it did over here a few days ago. But obviously no one can predict that was going to happen. But I guess the best part of this trade that I learned from it was to protect your positions and do not let the market reverse on you. And if you have a trade like that and you keep lowering your stop loss as the price keeps going down, that's great. When I'm looking for trades, I'm looking, as a baseball analogy, I try to hit a lot of singles and doubles. Those are the 20, 30 pip trades for me. Every once in a while, I guess you hit a home run like this, but I certainly didn't know it was going to happen. But when I saw it develop, I thought, well, okay, let's just see where it goes and let's run with it and keep trailing it down. And eventually this trade's going to run out of gas. But when it does, my position is protected. And I captured those pips, so I didn't have to worry about getting back into a loss position or anything like that, or losing, everything that I even a little bit of money that I gained out of it. So I was completely happy with this, but I hope I'm not jumping around too much here in terms of me talking about what the rules and everything that I use to follow this trade and how it got set up, but that's kind of what I look for. And I don't want to place trades. The other thing too is I don't want to place trades in the 15-minute chart where it's in the middle of the zone right in here. I like in here, for example, I would not want to place a trade in here. I want to wait till price is in this zone or in this zone. I always want to wait for that. And I always want to wait for price to come out of these zones and have the MACD match the direction of where price is going. So this is that good example of it here, where price is going back up again. The yellow line's crossed over the red on the MACD. Price is heading back up. So I always want to look for that. If I don't see that happen on the MACD, I won't take the trade.
Right.
I won't take that trade. I'll just leave it alone and let it, wait for it to develop. And eventually when it breaks loose, then I'll get in. But before that, I just won't. I'll just wait. So that's, I guess, kind of everything that what I look at when I'm looking to place a trade. Now, if you notice, I didn't put a lot of emphasis on the 4-hour or the 1 hour. I do look at those charts. I glance at them to see what's going on. But a lot of times when I'm doing analysis in the morning, I'll look at the daily and then I'll look at the 15. And if I don't see the 15 in a supply zone or a demand zone, I'm just not even I'm not even gonna take the trade. I'll wait for price to come back into this upper zone or this lower zone, and then wait for the entry signal to develop. And at that point, that's when I'll get in. But in here, I won't take trades in the middle. I've gotten burned too many times over the years, thinking in my mind that I've had this problem in the past for me personally of projecting where I think price will go. And that's gotten me in a lot of trouble. So I'm really working in my mind to avoid that, and not think about, well, here's where I think price is headed when it might not ever get there.
Right.
And then I've got myself in a position where I'm losing pips and I made a mistake. So just want to make sure that I've got price in these zones, and if it's there, and that when the setup develops, then I press the button and off we go.
Awesome. No, I mean, that, like I said, what everything you explained here is golden nuggets. I know that there may be some, right now there's some fuzziness with the MACD and the daily in relation to the 15-minute. You're gonna learn that as you go along. But are there any questions now as it relates to the relationship with the higher time frame and the lower time frame? Because basically, what Dave just shared and explained, it all starts with that understanding, that concept, that higher lower relationship. It starts there, knowing what you're looking at on the higher time frame and what you need to be seeing in relation to that higher time frame on the lower time frame. So I know it can kind of sound mumbo jumbo, it can kind of sound twisted. So again, this is your opportunity to ask any questions as it relates to that, because what I can tell you is that when you understand the relationship and when you begin to execute based on that, you're going to see, you're definitely going to begin to see more profitable trades. Would you agree, Dave?
I would agree with that. One thing that I really learned a lot in Janice's Forex Mastery class was, like, when I'm looking at this daily chart again, for example, and again focusing on this today's candle, or what would be yesterday's candle really, but if we see this long wick at the top of this candle right here, that tells us that gives us a clue on what has happened with price.
Mm-hmm.
And so when I see a wick like that, I know price has dropped. If I see a wick that's that long on the daily, I know that price has dropped rather severely on the shorter time frames. So when I saw this morning that the wick wasn't as long, but it was about half as long, the wick where you see me, like, well, I'll draw a quick little line right here. I think price was probably like right in this area right here where I just drew that, where price was this morning. And when I went and saw that, and then I went over to the 15-minute chart and I saw that right there, that wick started developing, and then you see this long bull or bearish candle. That's the long wick that happened.
Yes.
on the daily chart.
Mm-hmm.
Now throughout the day, the trading day, this is in the New York session as I mentioned, with the New York Stock Exchange being open. Now that at one point earlier today, this wick got completely filled. We had a long wick here, then price went back up, and the wick on the daily chart would have completely disappeared. And it would have given the impression that maybe price was actually going to keep going up and pushing more bullish on the daily chart. But then it reversed again, and price closed down in this zone here. So this second drop that happened today is what developed that wick, this long wick.
Mm-hmm.
So at one point when I took the trade, it came all the way down, then it went all the way back up, and then it came all the way back down again. So price finished a lot lower today than where it started, obviously with the red bearish candle here, but that's how the wick developed. So what I do a lot of now is when I look at a daily, when I look at a candle on the daily chart, and I see whatever I see, like, but with those wicks, I think in my mind, even before I go and look at the 15-minute chart, I think in my mind, I'm going, what is the 15-minute chart going to look like? Where is price going to be on that chart in relation to the daily candle?
Mm-hmm.
Is price going to be in a supply zone, a demand zone? Is it going to be in the middle? Wherever it's going to be. And to me, it sounds kind of weird, but I kind of turn it into a guessing game for myself. And I'm going, okay, if it just happened to be the case this morning where I caught that trade where price was just coming out of a supply zone on the 15, but it was high enough where price was high enough up in the zone that where I went, okay, I'm taking this because the setup was there, and off I went. But that's one thing that if you take Janice's class, you'll learn she'll ask you the question, what do you see on the daily chart? And if you see a wick like that, what do you expect to see on the hourly chart or the 30-minute or the 15-minute chart? And it trains your mind to envision where price is going to be on one of the lower charts before you actually click your mouse on that lower chart to see where price is going to be. So that little skill right there is simple as it is, has enabled me to take better entries on trades. I used to take a lot of entries, and I got burned a lot on this before, but I used to take a lot of entries thinking that taking them on an hourly chart, but being an intraday trader. At least for me, I've discovered that doesn't work very well. You know, if I'm a swing trader and I'm going to take a trade off of an hourly chart and then wait 2 or 3 days for the trade to develop or wherever it's going to go, that's fine. But I don't want to be in the trade 3 days. I want to be out. I want to be in and out today.
Right.
So I need to go to a lower time frame for a better entry in order to capture more pips. So I caught myself, you know, weeks ago placing trades off of the wrong chart for my trading style. Placing trades off the hourly chart for an intraday trade for me just wasn't working very well. So I switched it up and I went, sometimes I'll even take trades off of a 5-minute chart if I see that the setup is correct. But it's more the 15, but if I see a good one on the 5 and I see the price, in order to do that, I have to see that price is in either the red zone or the blue zone on the 5-minute chart and the 15-minute chart. I got to see that they both match, because I got to see price coming out of those zones in order for me to have the confirmation to, you know, to hit the go button. But by and large, it's the 15-minute chart, and that's where I've been having the most success.
Yeah, I mean, I stamped that all day long. Completely agree with everything that you shared here today, and it just makes it much more clear when you operate under that understanding, and of course those rules as well. And of course, we can't predict the market. Like, you didn't know that drop was coming like that. But prior to that bearish engulfing candle, your rules were there. Your rules were there.
Yeah.
Right? And it pulled back a little bit and then it dropped. But prior to that, your rules were in place. So even from that standpoint of the rules, it gets you where you need to be, in the best position to be in. I should say that. It puts you in the best position for a favorable outcome on your trade, just from the rules itself. And then of course it dropped and yeah.
It worked out. It ended up working out. So it was good, but I think it's just a matter of, like I said, just following the rules, staying disciplined to your rules, not deviating from them, not jumping around to different charts and looking for entries off of different charts. Whatever your rules are for entry, if you're going to enter off of a 30-minute chart, if that's your comfort level, then do that and don't change it. Right. If it's the 15, do it and don't change it. But be sure that you're consistent. And that's one thing I've been trying to work on, is to be more consistent with the rules, and being more patient and waiting for the right entries to develop.
Yeah. Well, that's golden, and because patience pays the bills, right? That's Paul saying. Patience pays the bills, and it does. And it is probably one of the hardest disciplines, you know, to develop, but work at it every single day. And not only in trading though, but just in life, period, because trading really shows us those areas that we need to improve upon, because we bring those limitations to the charts. But because of the nature of what we do, it gives us that reflection back. And that's a good thing. We need to know what those limitations are so that we can begin to overcome them. And I always say this, I don't want anyone to feel like you're in a boat by yourself. Every last one of us have had to, and consistently overcoming different areas in the realm of discipline. and patience and things like that. It's just imperative. It is. I mean, you're not going to have a favorable outcome if you don't exercise it. And of course, there are things that we can do, to promote that, to strengthen that. There are things we can do to do that. But at the end of the day, like I always say, you have to be the one who do it. We can provide the roadmap, and but you have to drive the car, right? You have to drive the car. Any questions on higher, lower time frame relationship? Anything that Dave have shared with us tonight? Any areas needs any clarification on anything? This is your time. This is your time. So you all can jump in there. I did want to just kind of reiterate. I mean, really, every single thing that Dave has talked about that is the deal. Like, really, that's it. And we can't say you're gonna win every trade. We're not even promoting that at all. But when you have clarity in your mind, you'll have clarity in the charts, meaning you know exactly what you're looking for. So no matter what's going on the chart, it does not create conflict or confusion in your mind because you have clarity. So now when you're looking at the chart, you know exactly what you're looking for. That piece alone has, I can't even tell you, just made such a world of difference in my head, right? In my head. So all of the lines and when I first started trading, my chart looked like spaghetti, but I was able to, sift through all of that and focus, zoom in on exactly what I needed to see. And then of course, eventually all those other squiggly lines, I did away with them because they weren't necessary. So Stacy asks that, how do you do the automatic trailing stop? And I do believe Paul did that last week on the last video is on there. Now, what Dave was talking about wasn't the automatic trailing stop. He manually did that. So Dave, did you want to explain that?
So what I did, I've actually never used an automatic trailing stop. I've never used one. Paul did a great job of explaining that last week on how to set it up. Mm-hmm. And if you are comfortable with that, that's great. I in this particular trade this morning, when I got to the point where I was 30 to 40 pips in profit, then I set a manual trailing stop. Like I just moved price. I basically just took my entry price and I set my stop loss 20 pips below my entry price. And I manually went in and entered that price on both positions that I had. And then I saw that price wasn't reversing. It kept going down. And then it went down like another 20 pips. So I was 60 pips in profit. Well, when I got to 60 pips in profit, then I moved my stop loss price down another 20 pips. So that at that point, I was 40 pips in profit as price went down. And then it went down another 20 pips and went down 80. And so I dropped it again and another 20 pips. And I kept using the 20 pip mark as the 20 pip, gap from where price was compared to where my stop loss was. And so as price dropped another 20, I'd drop it some more. And that's how I did it. And then when it got to the end down at the bottom, down in the demand zone, and I saw that it was consolidating, I stopped. And I just waited to see if price was going to keep going any lower or not. And it turns out that it didn't. But when it reversed, it was right there. It reversed and it took me out, but it took me out when I was 157 pips in profit. And so I was thrilled to have a trade like that. I have never done a trade like that in the time I've traded ever. So this was the best trade that I've ever had, and I've never had the experience of having a trade, that many pips in profit on a trade. So I was, completely thrilled by that. That made my hold. I didn't trade anything else the rest of the day. As soon as I was done, I more than met my goal for the day, and I didn't want to get greedy and go, okay,
right.
And
give it all back.
Find. because
Right.
I know when I've done that in the past, I have messed myself up, and I've had days where I'll keep looking for more opportunities, and there have been some days where I've lost everything that I made.
Yeah.
And so I just walked away. I turned off my charts. I walked away and I just did other stuff the rest of the day. But that was
Yeah.
5:30 in the morning. I went back to bed for a while and got a little bit more sleep. But
That was a nice sleep too after coming
yeah,
off 157.
yeah, it was kind of nice to go back to bed knowing that I had that trade. But I even when I woke back up and I was watching the markets this morning, there were some other setups that I thought, wow, this looks pretty good. I should get in here. But then I thought, you know what? I'm just not going to do it. I don't want to get in anymore. I more than made my goal for the day, and I'm not messing with it anymore. I'm just going to leave it alone.
Yeah.
So
Yeah.
live to trade another day.
Absolutely. Absolutely. And the fact that you were risk free even before you finalized it at 157, you were risk free, on the way down. And so
Yeah.
that's a thrilling, reassuring feeling to be in a trade.
That trade at one point, when it kept dropping so quickly. At one point, that I was 200 pips in profit on it, and I thought, well, okay, maybe it's gonna. But then I saw where it was, and I actually had my TradingView screen open as well. And in TradingView, you can set up those support and resistance like pivot areas.
Mm-hmm.
So I had that I was looking at that on my screen as well, and seeing where price was in the simplicity system, and then watching where price was on the in TradingView with the reversal pivot areas. And there were a couple of them where price just blew right through them.
Yeah.
And then, but it eventually got to the point where it hit one of them, and in particular, it hit one on the daily chart, and that's where price completely halted and then consolidated and reversed back up. So I knew when I saw that happening, I thought, well, this is probably the end of the gravy train. And then, but I was already in a position to capture a lot of the pips with where I had the stop loss set. So
yeah, and so
I gave back to the market a little bit. I could have closed it out with 200 pips, but if I would have done that, that would have been great. But I also just wanted to stick to the rule of just
absolutely
keep dropping the stop loss position just to see if it was going to go down further. And if not, it took me out, and then that was it.
Yeah. I mean, because we're not going to get every single pip. You structured your trade where, our number one goal as an investor, which is what we are as traders, is to protect your capital, and you did that. And you did that. That's the number one goal.
That's the number one goal. Is I don't look for how much I can make. It's more the issue of protecting what I have so I don't lose.
Absolutely.
And that's how I think about it.
No, that's it right there, because all too often we do just that. We give the market back. And the reason we give the market the money back is because we're trying to get it quick. We're trying to get it quick. This is a long-term game. We made, like Dave, he made 157 pips in about 2 to 2.5 hours. And that's great. Now, had he gone back chasing, he would have been in a chasing mode at that point.
That's right.
Was there other opportunities? Absolutely, more opportunities. But his goal was met, and that's it. Close the book, close the chapter, and we have to get to that point where we're looking at the long-term benefit of what we're doing rather than trying to just chase, because that's when we give it all back.
I've had those experiences in the past too, where I've lost trades and I've lost money, and then I tell myself, well, I got to get back in the market to make that money up. And when I start thinking that way, then the problem gets worse.
Absolutely. Yeah. Your foot is on a banana peel at that point.
Yeah, you're exactly right. So, when I've caught myself doing that in the past, I've violated my rules.
Mm-hmm.
I'm just looking at, a quick entry to see if I can make back what I lost. And then I've had it happen in the past where, I lost 50 pips in a trade, and then I'm going, okay, I got to look for another trade to get that 50 pips back. And then I'll find a position, and then I'll lose another 50 pips.
Mm-hmm.
It's like you just said, it's the banana peel thing.
Mm-hmm.
And then I get to that point, then I'm even more frustrated.
Absolutely.
So,
and we share that with everyone here because You know, we're all at different, journey levels in this journey. So if you have not experienced that, please take what Dave is sharing, take it on board so that you can mitigate those.
The market doesn't care about us.
Not at all.
The market doesn't care about us. They don't care if you've got, 100 grand in your account or $100 in your account. They don't care. They're out to take that money.
Yeah.
Because that's how they make their money to increase their liquidity so they can keep trading and taking more positions away from us.
Absolutely.
And that's really how I think about it a lot, is like, I don't want to give them my money. They're out to get my money, and I'm not going to give them my money.
Absolutely. Absolutely.
So it's a battle. It's a battle between us and the market makers. But if we have a good system and we follow it and we're true to it and you're disciplined with it, it doesn't have to happen.
So Dave, if this was 1 hour after the London session, do you see a trade now?
Well, that's an interesting question, Doreen, because then I probably would have thought I would have missed the move, because price, I don't know. I mean, price at that point, at 4 a.m., see, this is 3, this is 3:15, this big engulfing candle is 3:30. This is 3:45. This is 4 o'clock. So this hammer candle right here is 4 a.m.
Right,
And
I'm
it would
talking
have
about
been
now.
between the two zones. So
Right,
then
I'm talking
going,
about.
okay, now what do I do? I
Mhm.
would have looked at it and go, I don't think I would have gotten in that trade. I would have
No.
felt I would have missed the move after seeing that large engulfing candle. And then I see that hammer candle and I'm going, okay, is price going to go back up or what? I don't know. I don't know if I would have taken it, or else if it would have continued down, maybe I would have waited to see if it would have broken below where I've got the line right, oops, sorry.
Hey, Dave, I was talking about now, right? The very last candle where price is now, right
You mean
now.
like right now?
Right. If it was 3 o'clock or if it's 4 a.m. Eastern Standard, do you see a trade that you would have taken based on the daily time frame as your higher time frame, if that's what you were going to be looking at, the daily?
If my rules were in place, like if for example, if I were to look at this 15-minute chart exactly the way it is right now, I don't think I'd take the trade. It's too close to a demand zone down here, and it's too close to, if we look left, it's too close down in this area where there was some consolidation.
What is it doing on the daily?
I mean, in relation to the daily is dropping, but it doesn't match my rules for, if I want to take a sell trade, I want to take a sell trade up here.
Up on this, right. Mm-hmm.
I don't want to take a sell trade down here.
Absolutely.
And I very rarely do that. I know that sometimes you can if the market's really moving, but I don't know. I just tend to be more conservative about that. And if I would have seen price, break below where I've got price right now, like what is that, 128.59. If I would see price break below that, well, then maybe I would consider something down here, but I probably wouldn't. I probably would just pass on it and wait to see another setup. I would just pass on it.
And it's not to say, I would pass too. And it's not to say that it won't go down in there and you won't get your pips. It's not to say that, but it's now no longer a quality trade.
For me, it would be, I've just done too many of those in the past for myself, and I've been burned by them. And I'm trying to get away from the for lack of a better word, I'm trying to get away from being greedy.
Yeah. And then, like you said, and we have our rules. We have to follow your rules. And quality over quantity is the name of the game. Quality over quantity. So that was definitely good stuff. Somebody in here I saw about the pair, focusing on 1 or 2 pairs. Stacy saying that she likes that idea, and Audrey likes that idea. And it definitely has benefits because one, now your attention is not all over the place, first and foremost. And a lot of times I do believe that people like to chase different pairs because they're chasing money. They're chasing the money. And if you're running behind, just think of it like this. If you're chasing someone, then that someone is running from you. Does that make sense? If I'm chasing someone, then that someone is running. That's the only reason I'm chasing. So that someone replaced someone with the dollar, with the money. So if you're chasing money, that means money is running from you. When we get out of that mindset of chasing the money and waiting for the money to come to us, we'll get more of it, right? We'll get more of it. And oftentimes, a lot of people chase different pairs because they're, chasing the money. The benefit in focusing on one or two pairs is that, one, you're not distracted by all the other noise of the other pairs. You're not trying to understand, because every pair has its own behavior. So now you're looking at 7, 8, 9, 10, 20 pairs. You're looking at 20 different personalities, and you're trying to make sense of all of that. And in your head, you got your rules down, but when you spread that over 20 pairs, 15 pairs, and depending on your bandwidth, it may be 8 pairs, may be too much. And now what you thought you knew is it's like scrambled eggs. So the focus and the attention that focusing on one or two pairs that bring you, it really, really sets you up for success. It really, really does. Focusing on one or two pairs, also people feel like, well, I'm not going to be able to get in no trades, but here's the thing. No matter what you do, you have to be patient anyway, right? We have to exercise patience and discipline anyway. And so you're never going to miss an opportunity if you're focusing on one or two pairs, because it's going to be one or two things: is ready now or is ready later. And what you as the trader have to be able to determine is, if it's ready later, what am I waiting for? What am I waiting for? When you have identified what you're waiting for, game over. The game is over. You're either going to get in now or you're going to get in later. There's nothing else in between that. Nothing else in between that. So I'm all for one or two pairs. Like, I can't tell you how good it feels in my head, right? So any other questions?
Everybody's got a different.
I'm sorry?
Everybody's got a different trading philosophy, but I think that I used to be the type where I'd go through all 28 pairs. Like I'd look at the daily chart on all 28 pairs. And then if I found anything that was appealing to me, then I would drop down to the 15 to see if I could find a trade off of that particular pair. And if it was there, or if it was forming at the time, but the trade wasn't ready to be, to go yet, then I'd write it down. Mm-hmm. And then, but by the time I did all that analysis, mm-hmm. then I missed it. Right. Because I would go and look at all these trades, and then I'd go back to the one where I thought it was a good setup, and then all of a sudden the trade happened, and I missed it anyway because I was busy looking at everything else. Right. Yeah. So I'm trying. This is new to me. This is new to me to just look at one or two pairs, but in doing that, frankly, it's been a lot less stressful. Mm-hmm. Absolutely. Because I'm not just flipping around looking at all the different pairs. I don't have that kind of a mind. I just can't work that way. If there are people out there that can do it, and God bless them, but I can't. I got to stick with just a few, and by doing that, like I said, it's a new concept to me, but it's been working so far, and I've only been really focusing on the pound USD pair for the most part over the last couple weeks. But in doing so, my trading has improved. Yeah. You're going to continue to have success in that, and primarily because you have clarity, right? And so now you can see things much more clear. Last round. Any questions before we wrap it up? Comments, questions? Dave, let me just say you did a fantastic, phenomenal breakdown, absolutely detailed and simple, right? Simple, easy. Mm-hmm. And simple, easy, basically what Dave has done, he's identified the trend on the daily,
And then he also identified what Price is currently doing on the daily, and then where's Price on the 15-minute in relation to the daily. Is that correct, Dave?
Yes, yes, that's correct. And I
That's
appreciate
the
the chance
sauce.
to, I appreciate the chance to help tonight, and hopefully it makes sense to some folks. But
Mm-hmm.
you know, I'd like to help anybody. You're welcome to shoot me a private message if you want. And I don't check my Telegram all the time because I work. I have a regular job that I work, but I try to check it a couple times a day. But I appreciate the chance to kind of share with what's been working. And frankly, everything that I'm doing, I've learned from Janice. So I just just keep coming to class, watching videos. If you take her Forex Mastery class, all those sessions are all recorded, so you can watch them over and over and over again. And that's what I've done. I've watched each of those videos now a good half dozen times, and I'll watch them some more because it's there. You can never stop learning. You can
Right.
never stop learning in this Forex business. There's always new stuff. The market is always changing.
Mm-hmm.
But that doesn't mean that we can't be successful at it. It just means that we have to follow some very strict rules with whatever those are for everybody, and whatever you're comfortable with, whatever your rules are that makes you feel comfortable in your mind, so you don't feel stressed and pressured that you have to take trades. You just wait for the proper setup,
Mm-hmm.
and when you see it, you hit the button. And most of the time, if you do that, the pips will come.
Yeah. Absolutely.
So,
Absolutely. And I certainly appreciate that too, Dave. And look, I can't take all the credit. Dave came with a nice, level of understanding of the market. And sometimes it's just a matter of tweaking here and tweaking there. And basically that's all I did. And he just took off running with, what he has already acquired as it relates to this skill set. So absolutely appreciate all of you. Anything that I can do to continue to further the skill set, I am here. Of course, Paul and Doreen rocks and rolls every single day, keeping everybody informed, providing assistance and resources. So, we don't want you to feel like you have to go at this alone. You do not. We talked about last week, one of the unique benefits that our group provides is that we are doing this thing together, right? You can actually reach out and you can schedule time. I have scheduled sit down time that you can utilize my calendar for. However, I do audio phone calls all the time. And I don't have a problem with that. You can certainly do that as well. And we can just flush out what we need to flush out, because I'm not sitting down. When I'm sitting down now, my brain shifts in a different direction. But if I'm on the phone and I'm kind of multitasking, I am, but still addressing whatever the concerns and answering the questions, I'm more than happy to do that. Totally flexible in that regard. And so, yeah, that's the name of the game. Let's win. We're going to win this thing together. So listen, I want you all to come out of chat and show some love to Dave for taking the time out to share his insight and everything that he talked about today. So let's give him some love tonight. Certainly appreciate you, Dave. Thanks so much.
Thank you, Dave.
Thank you, Dave.
thank you. I appreciate it, you guys. Thanks for the opportunity, Janice.
Very
Absolutely.
enlightening.
Thank you, Dave. That was very good.
Dave. Great job. I love the
Yeah.
analysis. I love how he broke it down from the daily to the 15.
Yes.
And one thing that he said for me, and it's a testament that all of us is pretty much following the same rules of engagement at some point.
Exactly.
All of us has dealt with the same situation.
Exactly.
Like it's the same story with everybody. Like Dave got the foundation. He tried something. It didn't work. He tweaked it a little bit, tightened it up, and now he found something that worked for him.
Right.
Keyword that worked for him. See, I had to do the same thing. I'm sure Doria had to do the same thing.
Yeah.
Like,
Yeah.
we all have laid the foundation. but it's
Man, there are as many trading styles as there is DNA on the planet.
yes,
True.
You know, everybody's got to do their own thing and feel comfortable with what your own system is. And, you know, like I said, I've taken a lot from what I've learned, you know, just from lots of people over there. I mean, I've watched, even with our little group, I've watched lots of Janice's videos. I've watched Paul's stuff that he's put together and put out on Telegram. I've learned a lot from Paul. I've learned a lot from Doreen and stuff that she's added in the chat with a lot of her recommendations and her style. And, you know, it's kind of like making a cake. You know,
Yes.
you throw in the flour, you throw in the eggs, you throw in the milk,
Absolutely.
and you're all mixing it up, right? And it comes out to be something that you want. And that's ultimately what we all have to have is, you know, you may want to copy somebody's style a little bit, but ultimately you got to make it your own.
Absolutely. Absolutely.
Yeah, we all copied off someone.
Oh yeah, absolutely.
Yeah.
Absolutely.
Yep.
And,
Yeah.
and you
That's
know, also, I
really
also want to say that, you know, I don't, like, for all the new people, I don't want you guys to like feel discouraged that you know, you may have blown accounts or you've been in a struggle somewhere. Because trust me, we've all blown accounts. I'll say that right now. Like we all blown accounts. Like I've blown demo accounts. I've blown $2,000 money real accounts. Like I've been through it all. And for me to have the discipline that I have now, literally it took time. It was just timing to understand where you are, who you are as a person when it comes to trading. So once you find that niche, once you find that works, hold on to it and just use that and just take off with it. And once you find that consistency, you know, it's just golden from there. You know, sky's the limit from there.
Absolutely.
But it took me literally like 3 years to finally like say I got it.
Right.
Like,
and you right on time. Look, you right on time because it's generally around about the 3-year mark that you break that barrier. It's like, okay, okay.
It takes 8 to 10 years to be a doctor.
Yeah.
Absolutely.
Yeah.
Absolutely.
It takes time.
Like, so,
it takes time.
You know, just for the new people, you know, just, you know, be patient. You know, we're all here to help in some form of way. And I said it, y'all can hit me up. Trust me, I have a lot of people that are private messaging me. I mean, almost everybody in private message. Stacy's one. So yeah, I had a lot of people hit me up, and I don't mind it. I don't. Like I said, if I don't respond right away, it's because especially now because I'm working. You know, I'm back driving the school bus. School's open again, so. But I will return your messages. Everybody can test that I have returned your messages. I'm still trying to do one-on-ones. I'm still trying to make that at work for everybody. So it's just, like I said, this group, I'm going to say it right now. This group is the best group ever.
I did all that. Yeah.
Ever.
Absolutely.
Period. Ain't nobody can tell me nothing. This group, period, the best group.
Amen.
You're not gonna get this kind of help.
Nope, you're not.
Not the one-on-ones. You're not, and for free. You're getting it for free.
Say that again, Paul. Say that again, Paul.
Free. FREE. You already paid through Genesis program. You getting my one-on-one. I ain't charging nobody nothing. Doreen ain't charging. You ain't getting no action. Free.
Yeah, because that's
free. So I mean, the best group.
Yeah.
And
yeah.
we're all just here to help each other. We're all gonna get there. We're all gonna get there. It just takes patience and time. And then that's it. I mean, that's
and let me tell you, that's why I appreciate Paul and Doreen and Dave, and I know others that's coming up and contributing. I already see those individuals. I'm not gonna put them out there, but you see certain things ahead of time. So, but I certainly appreciate it because I couldn't do a fraction, and I'm being very transparent. I could not do a fraction of what Paul and Doreen does on a daily basis in this group. Much as I may want to, I don't have the bandwidth to do it. And so when you have people that align with your vision, right? And your heart for a thing, God will send you those people. And he certainly has done that in Doreen and Dave and Paul and others that's coming up. And it's all for the benefit of one another. We all gonna win. We all gonna win if you stick and stay. Guys, stick and stay. Right? So I appreciate you guys. This was an awesome training. I'm gonna download it and I'm gonna get it up. Well, Allison said it's a New York thing, Paul. Free. Absolutely, absolutely. And it's gonna be some more fire coming too. I'm always in the kitchen baking something, but yeah, we all gonna win. So I'm gonna download the training and I'll get it up to our site tonight. So with that all being said, guys, it was another great blockbuster, and I'll see you all next week.
Thanks again, Dave.
All right.
Good night.
Thank you, Janice. Thank you, Dave. Thank you.
Guys, we'll see you.
Thank you, Janice.
Yes, yes.